Well, big market swings can sometimes cause retirees and pre-retirees alike to get jittery, with some looking for safety. Now, volatility is normal, but it can be worse for retirees who are taking income at the time. My guest is Jeremy Nelson in Ridgeland, Mississippi. So, Jeremy, thanks for talking with us today. So it's been said that market corrections or volatility are actually worse for retirees. Why is that the case?
Well, Scott, first, thanks for having me. That's a great question. The issue that retirees face with volatility is that when you're not in retirement and you're in the savings phase, as the market drops, you're saving, you're able to dollar cost average or buy more shares at cheaper prices. As you're in retirement and you're taking money out, you don't have that opportunity. You're actually having to sell shares at cheaper prices to offset the income that you need.
So, Jeremy, it's always assumed that investors need to take risk in order to get returns. How do you know if you have too much risk in your portfolio?
Well, I think that it's important right now, especially as times are good, for retirees to take a look at what they own. And they can do a simple stress test. You can go back and look at the returns on some of the investments that you own back through different stressful periods. Even not necessarily even just 2008, but you could go back further and look at some of the other bear markets that we've had. And if you find that your portfolio would drop more than you're comfortable with, you should probably have a conversation with someone about it.
Normally, Jeremy, safe money options in a retirement portfolio would be CDs and bonds, but neither one are doing well right now. What are some of the other alternatives?
Well, I think that the first thing that investors need to do is they need to look at the time horizon when they're actually going to need the money. If it's money that you may potentially need, then it's important that it's liquid. So short duration bonds and things, or cash and CDs are still really your options there if it's money that you're going to need. But if this is money that you just want to be conservative, that you're not necessarily going to need, there is an evolution of products that are out there which offer principal guarantees and the opportunity for significantly better returns.
Great information, Jeremy. Thanks for talking with us today.
Thank you for having me. Appreciate it.
My guest again has been Jeremy Nelson in Ridgeland, Mississippi, and this is Retirement News Online. Thanks for watching.